Hey there, welcome back to part 2. What I want to look at in this video is who are some of the users of this accounting information. Let me find my pen. Users. Users of accounting information. Remember what we said before, that accounting, it's the information system for identifying, recording, and reporting the relevant business activities of an organization or enterprise. And the question is, as we are preparing, as we are recording, as we are reporting, we're identifying, we're recording, we're reporting relevant business activity, who are the users? Who are the users of this information? In the last video I said there were two users. There's internal users, and there are external users. Who are some of these internal users? Internal users would be people like managers of the company or managers of the nonprofit, sales staff, budget coordinators, controllers, people that are serving inside the business in order to manage the business, run the business, to make decisions about the business. Those would be the internal users. So let's put managers, auditors. You have internal auditors. We'll talk about that later on, other videos. Sales staff, executives, that would be managers, but people inside the company. Now, who are the external users? External users would be people like lenders. I mentioned earlier in the last video that bankers, they're not the only people that can lend money to a company, but people typically think of banks as lending entities. Lenders, how about shareholders? Shareholders are people who give equity to a company. They provide equity. They say, we'll gladly give you some money, and in return for that money, we want a share of ownership in the company. Those are shareholders. Lenders say, sure, we'll give you money, but we're not going to take it in the form of equity. We're not going to own any of your company. We're just going to ask you to repay us. Repayment is what they're after. Repayment of principal plus interest. Shareholders provide equity in the sense that they get an ownership stake in the company, and they're hoping that the company will grow, and they'll be able to cash out at a later date with a lot more than they gave you to begin with. So those are some of the external users: lenders, shareholders, external users. We had mentioned internal auditors up here, external auditors. Who would come in, audit our books to make sure that they are prepared according to generally accepted accounting principles. These are the external auditors who come in, CPAs, external auditing firms. Those would be some other external users. How about consumer groups would be another one. Let's say here consumer groups. Really, it's anybody who's looking for information, financial information about the company, excuse me, who is not an insider. And what we're going to see is, I mentioned earlier, that it's because of the reality of these external users that it dictates how we record the information that we're recording. So when we talk about generally accepted accounting principles, this is what we're going to be talking about. The reason we have those is because of external users looking at our financial statements. And so we provide information, accounting information, according to a set of standards that everybody will be familiar with. So it's almost like, what would be a crazy illustration? How about the game of baseball? How many innings are there in the game of baseball? 9. There are 9 innings for a typical game of baseball. What would happen if one game of baseball they decided to play 2 innings, another one they decided to play 6 innings, the next one they decided to play 24 innings, the next one they decided to play 15 innings? You'd be crazy. You'd have no rules. You'd have nothing to rely on. Well, we know when there's a game of baseball that there's going to be 9 innings, unless it goes into overtime, it'd be 9 innings per game. So in the same way, when it comes to financial and accounting reporting, There are generally accepted accounting principles, rules of the land that govern how we record things. We're going to spend a lot of time learning the discipline, the profession of accounting, and how it's done and reported according to generally accepted accounting principles. So that's it for video 2. We'll see you in the next video.